Yo, what's going on, everyone? Welcome to the Investing Bros live show, our special edition, where we're going to be covering the Fed announcement live. Here in 10 minutes, we will get the official number from the FOMC about what they're planning to do with interest rates. Spoiler. They're going to cut rates. They're going to cut it by 25 basis points. We're going to talk about those numbers here in just a little bit. But then stick around with us. We're going to look at the charts, what they look like before and after. We have a couple of news headlines, and then we're going to be listening to Jerome Powell speak live at 2:30. We will break down what all of that means for crypto and if we're going to see another big explosion. Of course, we're just on the heels of the massive news about Donald Trump being elected president for the second time. That should be major for crypto, but this would just be a cherry on top. What's going to happen to crypto? You don't want to go anywhere. Watch all the way to the end. Make sure to smash that like button and hit subscribe. Let's tell YouTube this stream's a good one. Let's get more people involved. But first, we got to roll the intro. Here we go. T-Shroom. New location, same T-Shroom. How are you doing?
Oh, better than I deserve, Tim. Better than I deserve. How are you today?
Look at this crystal clear Wi-Fi. Look at this just working with no pauses, no gimmicks, no nothing. You always love when a good thing comes together. Right. I'm doing good. I'm doing good here, T-Shroom. As we kind of ease in here, we got 10 minutes again, 8 minutes now until we get the actual announcement. We're going to have a lot of fun today. Guys, engage in chat. We're going to be engaging with you guys a whole lot. Funny story, T-Shroom, this morning. I'm working out at the gym.
Nice.
Great day. Got some good deadlifts in, get some good work. It was kind of like a more HIIT workout, though, like a higher intensity. And I'm walking to my car, and I hear across the parking lot a guy yelling. But now I'm listening to a Andrew Huberman podcast, right? I listen to podcasts when I lift. I have no idea what's happening. So I look over, and there's this guy. He just has his hand in his air, and he's yelling again. And I take an earbud out, and he's yelling, "Tim!" I was like, okay. So I point at myself first, very awkwardly. I'm not used to being seen in public. I walk over. I am sure this is the nicest guy in the world, but it was a very awkward interaction. He just holds out a fist for me to fist bump. I fist bump him, and he says, "All right, see you later." I'm pretty sure it's somebody recognized me from YouTube. I didn't know who he was. If that is you, thank you for saying what's up. I'll see you at the gym probably again. But he didn't say his name, so I have no idea who I met today at the gym. Just a random bystander who gave me a fist bump. There's my awkward story of the day. T-Shroom, how's your day going? Other than being in a new location, what's new with you?
Oh, man, it's good. Big shout out to the Brevard Workspace for housing the Investing Bros show today. If you're ever in Rockledge or Titusville, Florida, anywhere on the Space Coast, you're looking for some co-working space, look no further than the Brevard Workspace. So
there you go.
Yeah.
Free sponsorship right there.
Yeah, absolutely.
Well, let's get in here, T-Shroom. Let's talk about what people are really getting in here for. Go to my screen. This is the Trading Economics website. Got a lot of things going on. By the way, initial jobless claims coming out as expected here, higher than last month. Or last week, I should say, because this is a weekly thing, but at 221, right? So kind of just exactly what we thought. Jobs are going to be a big detail, right? Moving forward, what the job space looks like will have major impacts on future rate cuts and how we handle things. But the most important thing we're watching for right in here, the Fed rate decision. Previously, it was at 5%, again, or you could say it was 4.75 to 5%. The expectation is we're dropping to 475. We're going to wait to see if that number comes out. You can see when you go to the CME Futures prediction tool, 99.1% probability of making a move down. Excuse me, I think I missaid that. It was at 475 to 5. Or actually, I said that. Never mind, I was right. The 99% prediction is we're going to go to 450 to 475. Or as this over here says, 475 is the expectation. That seems like a pretty sure thing, right? So what's going to be so important about today's announcement and what the markets are going to do afterwards? A couple of weeks ago, Larry Fink, the CEO of BlackRock, ever heard of him? We talk about him from time to time. He came out and said that he believed that we were not going to get as much of a rate cut as people thought. He was predicting a total of 25 basis points the rest of the year. Now, there's only 2 more meetings, right? So that means he's predicting that in one meeting, we will see a 25 basis point cut. In another meeting, we will stay paused. Well, at the moment, if you go to the CME futures tool and you take a look at the predictions for December, 66.5, or we could round it to 67 if you include the people predicting for a 50 basis point cut, but only 67% are saying another 25 basis point cut in December. We currently have about 33% almost saying that we should stay paused in December. Will Larry Fink be correct or not? What's going to happen with the price of Bitcoin as we go over to the Bitcoin screen, and we'll check in on a lot of different charts and what they're doing, but will we see another major pump? Will we see a big movement to the downside? It's going to probably depend a lot upon what he says in the press conference, T-Shroom, alluding to, hey, is this the last great cut? Is this the last cut for a while and then they're going to monitor? Or do we expect these cuts to stay continuous? Do we think that we're going to start making that move back down towards 0% interest rates, at least get back down? I think there was expectations a couple meetings ago that they said over the next couple of years they want to get down to 3%. What's the goal here? Are we going to stay high? Are we going to go low? Again, this is where it comes back in. I'm going to get your take here in a second, T-Shroom, but it comes back to the job market. And in case people are wondering how this is going to work, let's kind of explain this. Jesse Eliason, Eliason, I don't know how you say the last name there. Excuse me, Jesse. But he said, wouldn't quantitative easing cause more inflation? And the answer to that question, Jesse, is yes, right? Currently, inflation is sitting at about 2.4%. We actually were looking at this. Go back to my screen here, T-Shirt. We're getting inflation numbers out next week. Next Wednesday, we'll see them again. Currently, they're at 2.4%. The forecast, we don't have a consensus yet. The forecast is we're going to see a slight increase at 2.6. Well, some of that has to do with the fact that 2 months ago, we cut interest rates by 50 basis points. Today, we're probably cutting by another 25. We're ultimately kind of sitting here. You can go off the screen now. We're watching the Fed deal with their dual mandate, Jesse, meaning they have 2 things they have to watch. They have to watch the inflation numbers, and their goal is to keep those inflation numbers low. But the other side of the equation is they have to watch unemployment, and they got to keep unemployment low. Well, right now, historically, and Jerome Powell said this several times, we've actually seen that inflation's doing really well. Again, we're getting very close to that 2% target. And unemployment is not ridiculous. The problem, though, is we're starting to see some signs that unemployment might be about to take a little bit of a ride to the upside. So with the dual mandate and inflation now semi under control, at least from a data perspective, he's really going to be watching that job market to decide if we want to increase or decrease the interest rates. And yes, by decreasing the interest rates, you're going to allow for inflation to come back up. But what you do is you also make it harder for unemployment to climb. And right now, when he's looking at these 2 factors, he's looking at inflation and unemployment, I think he's more worried. I think the Fed is more worried at the moment about the unemployment number, whereas for the last 2 years, they were more worried about the inflation number. Mm-hmm. That is why interest rates are going to be good. They will bring increased inflation long term. Guess what's good for that? Or guess what is good at transitioning with that with Bitcoin? That's very good for Bitcoin price. But they're going to fight to try to keep that unemployment from skyrocketing out of control. That's why I think we will see a 25 basis point cut, not only in this month. I still think they will be doing it in December. But again, what Jerome Powell says here in roughly 30 minutes is going to be the key factor. Now, we're going to look at the charts here in just a second, but we're about a minute away from actually getting the number. T-Shirt, I'm going to throw it to you. How are you processing with this information? What should people know about that maybe I left off that they need to be aware of kind of is a big factor in this whole game?
Well, Donald Trump getting elected is a huge factor, right? Because and of course, the Fed doesn't factor that in. They're trying to be agnostic towards partisanship. They're trying to be nonpartisan. However, make no buts about it, Donald Trump is a risk to inflation getting back up because he's going to lower taxes. That is going to deliver more revenue, more profits to the stock market, to corporations, and generally, he's seen as kind of an energizer to the American economy. If you run out the formula of what he wants to do with tariffs as well, that could also equal quite a bit higher inflation domestically, specifically for the United States. Is there a pathway where we have an economic boom and no inflation? Possibly, right? But the Fed does need to keep that in mind. Did we get the print quite yet? I'm here refreshing the page.
The countdown went down.
Yeah,
I have those 3 loading bars at the moment.
Got it right here. So the Fed lowers benchmark rate 25 basis points. Yep. So that is what was predicted. Fed says risk to goals remain roughly in balance. Labor market conditions have generally eased. This from the Zero Hedge Twitter account. So there we go, Tim. 25 basis points. Nobody's surprised.
But go back to the tweet here. I'm going to read that. It says what's eased? The labor market conditions have generally eased. T-shirt, help break that one down. What does that mean? The labor market conditions have generally. There's some clarifiers here. First of all, what's the labor market exactly? What is he referring to there? Is it simple as jobs, or is there something else there? And then generally eased. What does he mean by generally? And what does eased mean in this case for everybody? Again, we're going to look at the charts and how things are responding. Bitcoin seems like it's just kind of staying still at the moment. It's kind of right where it was when we got the announcement. But T-Shroom, what does this mean from Zero Hedge? Labor market conditions have generally eased.
Well, so this is going to be taken out of the speech that has now been published. You know, they issue a PDF with every decision of kind of their thinking on it. We're about to hear Jerome Powell in just a moment go live over here on the Fed website. This will be coming up here in just a minute. Listen to his press briefing. But using that language, generally eased, I'm going to say, Tim, is pretty vague, right? That doesn't
Extremely
mean vague. It doesn't mean a whole lot. What it does mean is it's a comfort words, right? It's like, the labor market, there were some issues. Those issues have eased, right? The biggest issue from 2024 was that 800,000 employment revision. That was a very big spike in worrisome data that has come out that has made the market, kind of raise an eyebrow towards labor conditions. But the Fed here is clearly trying to ease the market. And it's hard to say that they're wrong. Yeah. And I can show you why, because if we look at the unemployment rate, this is a fairly tame unemployment rate. If you look historically, going back to the 90s, you can see I've got a regression trend pulled up here. This is well below the lower band of the regression, which comes in around 6%, right? But we've historically, during the pandemic, we saw unemployment rate spike all the way up to 14, so that was crazy. And I believe in the past, it's gotten into double digits as well. But as you can see, just looking at historic data here, the unemployment rate is not in a space where I'm going to be ultra concerned about it if I'm the Fed. But there's more than just the unemployment rate. There's also non-farm payrolls. There's also labor force participation. There's a lot of other data that goes into it. And so, that's where the media is going to come in today. They're going to ask questions of Jerome Powell. They're going to see, kind of get a gauge of more granular detail of what he means by the labor conditions have eased, because Tim, that is a very good analysis that it is vague.
Yeah, it is what it is. Let's take a look at some charts here in a second. First of all, shout out to Magic Internet Money. Said, been a minute since I've been able to catch the bros. Got Tim and Shroom turned up while I get a pump. Well, I'll tell you what, your pump is coming at the expense of the market. It's just kidding. It's not a major drop. Let's take a look at what Bitcoin's doing on the 1 minute chart. Right, so the 1 minute chart, why does it say 14? I'm on a different time scale right there because it's saying 1400, which would be 2 o'clock. Anyway, you can see here, we did see on the exact announcement, the first minute of the hour, there was a sell-off. Then for the next 2 minutes, a little bit of a bounce. Now you can see we are dropping, right? So when we got the announcement, we were at 76,600. We're now trading at about 76,400. That's not crazy. The other thing to think about, look at the volume that came in here. It's not like people waited for that news headline and then said, boom, we've made our official decision. We're going to start trading. The volume is simply staying right in tail with all of the volume we've had pretty much all of today. Again, it's kind of picked up some volume here this morning around, again, I'm back an hour. So I think that's going to be like 10:30, not 9:30. Eastern Standard Time, but you can see nothing special has happened with this announcement. Also, when we turn on liquidations, what are some levels that are going to be interesting to keep an eye on? Easily, we could come down here and fill out some liquidity back down at 75.5. What do we know is the one thing of certainty around FOMC day? It's that markets will be volatile. Well, in this case, we got liquidity, we got longs that have set themselves up and said, if we come down to 75.6, I want out. In fact, we have about 5.7 million longs, $5 million worth of longs that would be liquidated if we come down here. Guess what that means? That means it's easy pick'ems. Everything's bullish. It's exactly what we thought was going to happen. Let's just cool off. Let's come back down to a price level we were just at earlier this morning, liquidate all these fresh long positions. Then we can focus to the upside where we have $5 million worth of shorts liquidations up at 77,400. Don't be surprised if we in the next couple of hours see both of these price targets end up being hit. That being said, that's the 1 minute chart, right? Let's take a look at a longer time frame to get a little more perspective about what is happening. Bitcoin's back up, setting new all-time highs today here on the 4-hour chart. We did get back above 76,000, but even better, we actually here have set up some bearish divergence on the 4-hour chart. Let's take a little bit more look in here. We got definitely 100% overbought on the 4-hour chart here from the RSI. That's something that's going to be a little concern. The MACD still looks like it wants to climb. I don't know why that's so small, but it's the highest it's been in quite some time. That MACD might want to cool off here a little bit, but then we come in here and you take a look at the Lux-Algo oscillator. We have red reversals, bearish divergence. I don't know why. I did not see this sooner. Maybe I was looking at a different exchange, and we're getting a small cool off on that oscillator. This is a thing to be aware of, though. That bearish divergence happened back here yesterday. We're now resuming this run. So is this bearish divergence going to be canceled out? That's a very common practice during bull markets. When the bulls are in charge, you see them cancel out. And that kind of takes me to the next thing I kind of wanted to talk about here with you guys. I don't love the volume here on Coinbase. Let's take a look instead. I liked looking at Blofin earlier where I was talking with our VIP trading group. Let's find where the Blofin chart is. Let's go right here. Is that going to be? Nope. Let's go back to Coinbase. I don't know. Maybe it's a different chart we are looking at. But what I'm noticing right now, T-Shroom, let's take a look at Ethereum. Maybe Ethereum's going to back up what I was saying here. No, I can't remember what chart we were looking at this morning. It was convenience with the volume. This is very sporadic volume here on Coinbase. Not every chart looks like that. But what I like seeing here, this increased volume we've seen over the last couple of days is what we would call confirmation volume, right? There's two things that volume communicate when you're looking at it. Number one, it can be strong reversals. In the case of, let's say, going back over here, back to August 5th, you see a massive spike in volume right there, matching this dramatic pullback. Well, what's that saying? It means that we were selling off dramatically, but the volume was relatively low, and the volume picked up when the bears were done, and it was time to rebuy back in. Same thing, we saw a high amount of volume back here in March when we were reaching these peaks, communicating the bull run was coming to a close, and people wanted to sell. Well, that's the reversal volume. What we are seeing right now is the confirmation volume. We're seeing the high volume come in as we're making some climbing motions. That is what happens during major breakouts and bullish momentum. If I were to go to the daily chart, kind of show you some examples of this. Again, here's good reversal volume at the bear market lows back in 2022. But let's take a look at where volume started to increase about 4 years ago, back in December. It was during the climb of that explosive bull market. We saw the volume increase dramatically during these big moves. We did eventually have some reversal volume come in here in January. But my overall point is right now what we're watching happen on Bitcoin's daily chart and 4-hour chart, this spike in volume is associated with a massive buy and a big move to the upside. That's what bulls want to see. The bulls right now are squarely in control. And these are the types of things that some people are going to get tripped up on. I myself got tripped up on this earlier in this bull market. I want to compare what we're kind of breaking through right now is very similar to what we saw last year, right? We talk about the similarities to 4 years ago. Let's talk about the similarities to last year when Bitcoin would go from 27,000 up to 49,000 very, very quickly. And you see, again, some spike in volume. It's harder to see right there. But there were so many flashes of resistance on lower time frames during these time periods, and the bulls just kept on buying. Any of you here last year, you remember this. We saw flash after flash after flash of being overextended, oversold. We need to reverse. We got bearish divergence. The MACD's high. We're 100% overbought in the RSI. And what did Bitcoin do? It just continued to the upside. That happens when we see, just like this, an increase in volume associated with bullish candles, that's confirmation volume, and it says the bulls are getting ready to run. That's what I love seeing here right now. We'll check on some other coins here in a second. Again, we're 20 minutes out from Jerome Powell taking the stage. That's going to be the most important part of this whole event. We've got 2 super chats here, T-Shroom. Crypto Geo says, don't forget, bros, Bitcoin ETF options start Friday, and we just cut 25 basis points.
That's
all
right.
Yeah, so what he's saying here is we just got extra liquidity into the space. We have options starting on Friday. That's going to be a lot of people looking to get in before the bull run starts. Crypto Geo is just sitting here telling us Bitcoin's about to go up. Thank you for that, Crypto Geo. Fade and Tradfi says, thank you, bros, for so much. Been here since the beginning. I'm so ready for this next part in the cycle. Can't imagine doing it without you guys. Keep up all of the hard work. Fade and Tradfi, thank you so much. Just for being around and being a supporter of the channel. Thank you for the donation as well, the super chat. But we wouldn't be here if it wasn't for people like you, Fade and Tradfi. If T-Shroom and I wanted to make money in trading, we just go do it on our own. We love being a part of the community that you guys are building as well. We're just the faces, right? So you guys see me and T-Shroom. You'll see Crux from time to time. But the truth is, this community, Fade and Tradfi, is special because of you. And because of all the other names in here that have been coming in for a very long time. If you are looking for a community, maybe you're newer here, maybe you just joined in because you saw we were doing the FOMC Live, thank you so much for tuning in. Hit the like button, help us get more people in here. Just hit subscribe, it's free, it helps our channel and our business grow, but consider being a part of the daily community, not just here on YouTube, but in our free Discord, where there is chat happening 24/7. We have a very engaging group of people, some of them probably even smarter than T-Shroom and myself. This is a very uplifting, encouraging community that everyone just wants to be successful, and we realize it's easier to do that together. Think back to college. It's easier to be in a study group than it is to do everything by yourself. Well, same thing here in crypto and investing. Sometimes it's better to bounce your thoughts and ideas off of other people. That's how you make the dream work. T-Shroom, it's going to you real quick. Surprises, not surprises. Bitcoin's not doing anything. What are your thoughts right now after these numbers, what you're looking at in the charts? Is there anything you're seeing pop off like crazy right now?
It's baked in. I think it was baked in, Tim. There was such a high level of certainty. If you're just tuning in, 4.75 equals a 25 basis point cut. That is what the market was anticipating. The previous was 5. So that's generally quantitative easing. That's generally good. That's generally bullish. And as one of our members here pointed out, that is also something that could potentially bring inflation back higher down the road. I'm not seeing anything fly. I think we're just seeing continuation from the election, just positivity.
It's hard to see things. It's hard to see things fly after this news because, like you said, baked in. That's an expression that's used to say when people are anticipating either good or bad news, they go ahead and buy or sell early. We're seeing that a lot. Go over here. Let's check out on a couple other coins. Ethereum, for example, here early this morning, or late last night, I guess, when the beginning of this candle started, made a breakout of a symmetrical triangle pattern that we had been monitoring here on the bros here for a couple of weeks. We hit our support level. Anyone who was watching and bought in here on 2,400. We told you guys to keep an eye on a move back to the upside. The extension of this could take the price all the way back above 3,500, but it's a very good start here, T-Shroom, not just breaking above this red line, but breaking above these recent highs as well. Next one, let's get above this high set back on July 22nd. Let's get Ethereum back to higher highs and higher lows. We call that a bull trend, but we're well on our way right now. Let's check out what our oscillators are saying here. A lot of great signs on Ethereum. RSI going back up, getting close to being overextended, but has a lot of room still to the upside for bouncing. The MACD crossed bullish here just yesterday. That's obviously a very good sign. A lot of room to the upside to grow. And then same thing when you take a look at the Lux Algo Oscillator. No great buy signal here recently. We had one back here on October 3rd. What did Ethereum's price do back on October 3rd? Is still the daily chart. We are right back here. Yeah, another support level. Good little buy signal there. But we're seeing here on the oscillator, the money flow is going positive. The oscillator, after kind of being in a tight bunch, is moving to the upside once again. This is all very, very good news for Ethereum. Should see the price, now that we've broken through a major order block and a smart trail here on the daily chart. Next target, not quite to that $3,500 mark, but $3,340. Good order block. take profit levels, top of our red resistance band. That's something I do love seeing here. What about liquidations here for Ethereum? Would you look at this? Right now, we have cleared out some major liquidations right here. Although these are now down below us back at support, but look at our price prediction for 3,500. There's a bunch of short liquidations right in that same area. Not a whole lot, a little bit right here at 3,000. That's to be expected. Anytime you get a rounded number, most people are very simplistic creatures. They like the clean round numbers for their take profits, their stop losses, everything else. But what I'm seeing of interest to the upside is this bunch up here above 3,500. So I think Ethereum, after news like today with the rate cut coming, it was getting close to being time for Ethereum anyway. I think it is waking up. It's making moves to the upside. By the way, you're also going to notice on the ETH over Bitcoin chart, if I change up here, this has been dropping for a very, very long time. Well, have we found a bottom? This is not necessarily the most bullish looking chart, but if you look at the last 2 days, Ethereum is catching up on some ground on Bitcoin. Let's see this get back up here, probably above this yellow mark around the 0.045 mark. And then we'll start talking about Ethereum being really ready to fly. But we got some good signs here. You're going to notice also how boring the volume is here. Volume turned around on these reversals. Well, we got some volume coming in the last 2 days as we're reversing and going back to the upside, meaning Ethereum is picking up some steam on Bitcoin. That being said, it's not yet time, in my personal opinion, for Bitcoin dominance and the alt season. So Bitcoin dominance to end and the alt season to begin. Again, long-term prediction from the channel. We said 60%. We have hit that. We're now retesting it as support. But I had a friend on the phone with me earlier asking, Tim, when will we know that the alt season is here and Bitcoin dominance has officially peaked? Unfortunately, I wish I could tell you I know the exact date. I think we're going to be probably running into December, probably going above 62%. But this is going to be the line you're watching for. If you guys are saying, when does alt season become official? Well, we'll know it's officially here when this trend line is broken. This blue rising line that's in place since back in June of 2023. When this line gets broken, you're going to feel very good about an alt season coming in very, very hot. The level we're kind of watching, 57, 56% dominance is going to be where we know it's happening. Now, technically, alt season would start whenever this does peak out, right? It's not like if we say the price, the Bitcoin dominance comes down here, that the alt season started right here. It started up here. The problem is at the moment, we could see the Bitcoin dominance fall all the way back towards 58%, and then still make a bounce and move higher up here towards 62 to 63% sometime in December would be my guess. But timeline, I'm looking at December. Price-wise or percentage-wise, I'm looking around 62, 63 cents is still my expectation before true alt season begins. But speaking of alts, and then I'm going to throw it to you, T-Shirt, and we'll start to set the stage here for Jerome Powell coming up soon. People have been also wondering what the heck is going on with Cardano. Well, Cardano with a little sign of life. It's one of the bigger movers here today. You can see it's back up rivaling with 40 cents. Now, 40 cents has been a zone that's given Cardano holders a lot of grief, not even just recently, but historically. That yellow line has been a mark of resistance and support for Cardano. So it's a very important mark to get above if we want to see the bullishness on Cardano continue. But we are seeing the signs as we're wrestling right now with 39 cents that it should be coming here very, very soon. You take a look here. Volume is increasing on these last two bullish candles. Love seeing that. That's confirmation volume. As you start to turn on the charts, again, we had a good buy signal. Well, we didn't really have a buy signal on the daily chart because that doesn't correspond with bullish momentum. But we are seeing at the moment, we are seeing positive oscillator and positive money flow action here on the daily chart. No bullish divergence. So this isn't like my killer buy signal, but I love what the RSI is doing, where you can see here over the last couple of days, we kind of had this tight little zone of boring RSI action, and we have now broken significantly above that. That's a very positive sign for Cardano. Let's check out on the other indicators for it as well and some levels to keep an eye on for resistance. This now has become a nice strong support at 36 cents. Again, former resistance. Look right here. Order block, smart trail, take profit, all coming in around 42 cents. That's going to be a level I think Cardano could rally up to very easily. The question is going to be, does that become a major selling point, or do we make a break above, start heading back up towards 45 cents, and all of a sudden you got yourself a very bullish looking scenario, in which case 50 cents, 53 cents is the next target based off of a falling wedge pattern that has broken bullish here recently, should be in the cards for Cardano. T-Shroom, and I see it right there, Crypto Geo, ADA is trash. You can't please anyone when it comes to Cardano talk. That's why I have to completely, when I talk about Cardano and I give expectations for it, I've learned, and this is how I have to do everything, but I just can't take opinions from chat or comments, right? Because it's so crazy opposite. I gave a Cardano price prediction earlier this week that made a lot of the Cardano bulls furious, thinking I'm the dumbest human being to ever walk the planet to think that Cardano is not going to explode a whole lot higher. And I'll tell you this right now. I hope that I'm wrong, Cardano holders. If you're a Cardano guy, I hope I'm wrong, and I hope you're right. I have a bag of Cardano. I would love to see $10 next year. I just don't think it's realistic. All the Cardano haters, on the other hand, think I'm way, way too bullish, calling for somewhere around a $4 Cardano here in about a year from now. Here's the deal. I can't listen to the lovers of Cardano, and I can't listen to the haters. I gotta just look at the data points. And at the moment, Cardano's ranked number 10. But I don't think there's a strong argument to suggest that Cardano is going to be able to do what it did last cycle, which is a lot of what the Cardano bulls are saying. They're like, Tim, last time it made it all the way to 4% dominance. Why are you saying only 1.3% dominance now? Guys, last time Cardano made it to the number 3 ranking during the bull market. Do we really think that's happening again? And I'm not asking the Cardano lovers. I'm asking people to be realistic. I love Cardano. I think Cardano's got a great and bright future. The problem is I think it's fairly ranked as a number 10, maybe number 11 coin. I think it's going to pretty much stick right there. Some coins will drop a little bit below it. It's going to jump some coins. But there's other coins out there like AVAX and Chainlink that are going to jump it and go higher into the rankings. I think when the bull market's over, Cardano's sitting at number 10. Not number 3, number 10. Well, historically, number 3 ranked coins get a 4 or 5% dominance. Number 10 ranked coins, they get 1.3% dominance. That being said, I got to plug those numbers in, and I got to take what the details tell me. And that tells me a year from now, a fair evaluation of Cardano is new all-time highs. It's just not as high as you want, except $4.
You got to remember that, yes, this is the institutional bull cycle, right? That is true. And institutions so far have not shown a lot of interest in Cardano. But Cardano is a late flyer, and when the retail comes in and we get into that euphoric phase, they're not going to be able to discriminate between Ethereum and Cardano and AVAX and Ondo and Solana. They're going to come in, and at best, they're going to look at market caps. They're going to look at undervalued metrics. They're going to see a very undervalued but high market cap coin, and they're going to say, deploy, allocate. It's the next Bitcoin. It's the next Ethereum. They're not going to be doing all this calculation of how does the crypto community feel about Cardano. That's not going to be the ethos. There's a reason why Coinbase app goes up to the top 10, and that's a topping signal for crypto as a whole. And that's because a bunch of people download it for the first time, or they download it again. All those people are not watching crypto YouTube right now. They're not learning how to trade stocks. They're not learning how to trade options. They're sitting and they're working a job. But in months from now, they're going to be downloading Coinbase and buying coins that they think are going to be the next Bitcoin, or coins that they think are going to make them wealthy. Cardano is going to be one of them. Now, I'm not sitting here saying it's the best project since sliced bread, right? But that is the dynamic that will give Cardano a bid.
Yeah, at the end of the day, we'll wrap up Cardano talk here. We're going to continue to talk about Cardano when we need to. I want people to understand we are not going to be as bullish as other channels. If you just want endless hopium, we're probably not the right channel for you. But we're also not haters of it. I'm going to always give, and it's not just Cardano. I'm going to be this way with every single coin that I do analysis on. I'm going to give my most honest and best case scenarios I can give you while remaining realistic. Will I be right about everything? No, I will not be right about everything. There's going to be a lot of things that I get wrong. but I'm going to do the best I can to be realistic and honest when giving our analysis.
Yep.
And my analysis is Cardano's a good project. It's not the best. There's going to be other coins that make you more money than Cardano, but there's going to be a lot of coins that make you less money.
That's right. Tyler Berry jumping in with a super chat. Thank you, Tyler. Said AVAX price prediction with total market cap for crypto. Tyler Berry, the best place to get the answer to that question is the YouTube channel you're already watching. So go back to our YouTube channel, scroll down. We have an entire 9-minute video right here that breaks down exactly the answer to your question. Tim, I don't know if you want to give him the back of the napkin answer on that, but I would recommend go watching that and all of our other coin price predictions that are much more thorough and comprehensive, answer all your questions in that regard.
Yeah, go watch the video. I mean, I could sit here and explain it to you, but the best thing you can do is just go watch the video.
Yep.
I saw somebody in chat here, T-shirt. Anything you need to comment before I don't know if you had something to say about the stream or anything, but someone wanted to look at Doge.
Yeah, we'll look at Doge. Queue up Doge. Let me run you all through some interesting developments here from the FOMC front. If you're just joining us, make sure you smash the like button. We will be hearing from Jerome Powell here in just a moment. There was a 25 basis point cut that was issued by the Fed, and they also issue this. This is called the press release Federal Reserve issues the FOMC statement. Okay, so that's there. And then what Zero Hedge does, which is just a Twitter account, they go in and they actually show all the differences, all the revisions from the previous FOMC statement. And the highlights here, we're going to probably go back and read that at some point in the show, but the highlights here were the key changes, most notably removing language that Fed has gained greater confidence that inflation is moving sustainably towards 2%. If we go and actually look at the inflation rate, we can see that they may have taken that language out because it is not moving predictably to 2%. Okay, goodness. Doesn't want to work with me here. There we go. So 2% is this yellow line here. You can see that currently we're at 2.4. This is called sticky inflation. This is where we're at or near the goal, but we're not actually across the finish line here. So that's an interesting key change. And then the second one, adding that labor market conditions have generally eased. We've already talked about this phrasing here since earlier in the year, replacing job gains have slowed. So that is the new phraseology there. It may seem petty to you. If you're newer to investing, you're newer to crypto, you've never tuned into a Fed live meeting before, but these are the types of phrasing changes that huge, massive banks and financial institutions will shift and allocate into totally different investments because of. So Tim, let's take a look at your chart. We believe we were going to be looking at what was.
We're looking at Doge here for a second. And I'm going to respond to chat here in just a second. A lot of people, great engagement here today. Make sure you go and smash the like button. We have over 840 people watching live right now on YouTube. Smash that like button, though, because I think, let's see what the updated number is, 256. We can do more than that, 256. Come on, smash the like button. Dogecoin here, guys. Did get to that almost that 22-cent mark. That is absolutely crazy. It's pulling back here just a little bit, obviously, today. A lot of other coins are positive. Dogecoin is one of the few that's technically in the red since the opening of the daily candle. That being said, where could you look for a potential pullback to happen? We hit the take profit here on Dogecoin. You can even see we're printing 100% overbought. The MACD is extremely high. I will say, while the Luxago oscillator is still technically giving us positive money flow and positive momentum, we had bearish divergence here that looks like T-shirt. We're going to get a double bearish divergence here on Dogecoin. So I'm not going to say that Doge needs to crash, right? Crash is the wrong term. Pause. Doge momentum might pause to wait for some other things to pick up because it got such a great front run on how all this is working. Like I said, we keep seeing these lower highs with the oscillators, but the higher highs in price action. Wouldn't be surprised to see at least come back. Let's go to the 4-hour chart for this one. Wouldn't be surprised to see it at least come back into this range around the smart trail and a major order block here. I'm gonna say 17, maybe just below 17 cents would be a good spot for Doge to pull back down to some form of resistance from here late October. But it was just very, very, very overextended. It does look like the daily chart is saying, hey guys, this high volume coming in, guess what happens with this high volume? Big wick on top of that candle. That means that while this was a good pump, we ran into some major selling. And this could just bump us back down, like I said, 2 or right below 17 cents on Doge. Could be an interesting spot to keep an eye on. Carlos C. with the super chat said, what are your thoughts? DIA, and can you do quick TA? Thank you and keep up the good work. I don't know if I know what DIA is, Carlos, and we have a minute before Jerome Powell takes the stage.
You know what, Tim?
So
we're gonna do something rare. I've got it pulled up here on my chart. Gonna do a little T-Shroom TA here.
T-Shroom TA.
Now this isn't looking too bad for October. The first thing that jumps out to me is that DIA has found support here, put in a nice low right around the level of this average price action here from this range, that high to that low. So I'd say overall, this is actually not looking too bearish. Now that is just a really, really quick TA, and we're going to have to jump over now to the Fed announcement here. Let's refresh the page, see if sometimes they take a little bit of time here. There it is.
And
plenty of volume.
We're going to be pretty quiet here while he's speaking. We might make a comment here or there, but we try to stay quiet while he's talking and answering questions. We will still be around for probably 15, 20 minutes after to just give you a wrap-up of kind of what he was communicating, what he was saying. But stick around. Thank you so much for being here, everybody. Again, smash that like button, hit subscribe, and I guess we can keep talking. Let's engage with chat here before. Let me know, T-Shroom, when Jerome comes out of that door. Oh, well, there it is. All right. We'll check in here in about 30, 40 minutes.
Good morning.
Good afternoon.
Wrong.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly, the September employment report was stronger. The October report not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular, and so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September. And in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting. Yeah,
totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. We're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that, again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. in the first paragraph when you say inflation has made progress, dropping the word further progress, and in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And is that are rising deficits a concern to you?
So we don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time, and a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time, and of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find 3 weeks later the 10-year was 50 basis points lower. So it's material changes in financial conditions that last, that are persistent, that really matter, and we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral, or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down, and so we're thinking about it that way. But it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So yes, we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher, what's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. Two questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on the first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But
this is one of the
it's a good labor market.
least
We
helpful
can talk about 20 different data
FOMC
series.
days I think we've
We'll
had.
be looking at all of them, of course. You know, we don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria. Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
No.
Mike?
I don't think he's a Trump fan.
Michael McKee from Bloomberg Radio and Television.
That was quick.
You talk a lot about what the data are telling you and how you are dependent on the data, but in terms of forward-looking
That's awesome.
Assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Sweet.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Not permitted under
Courtney
the
Brown
law.
from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with both of those, manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing where we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important, the precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of neutral, a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen, up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with, I looked at the 5-year earlier today, and it's probably moved, but it's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022, was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is, it takes some years of real wage gains for people to feel better. And that's what we're trying to create, and I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up. President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
Ooh, there's a fear word.
The whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So. But ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Let's go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
That's what they're doing.
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
Interesting stuff. Yeah, a whole lot of nothing. But that being said, I can come back out of all this chaos here. I was drawing there with the red line. Hopefully you guys picked up on it. I was looking at, are we up or are we down from where we opened the whole thing? And the line came off, right? The line's going to be somewhere here. I think it was 679 was the exact lever. So we're wrestling with it right here, right? Going down as things are closing. I had liquidations up here as well. Interesting liquidity down here at 75.5, 75.6. Interesting liquidity up here at 77, although it starts here on 77,000. 77.4 is going to be interesting. So still some volatility here, but look at that. It's exactly where the price of Bitcoin was when we heard the announcement here about an hour and 15 minutes ago. What that means? Nothing. That was a nothing burger meeting. When I say nothing burger, we cut by 25 basis points, but he's giving us no indication of what December looks like. Let's take a look at what we're looking at with the CME futures as far as December is concerned. Let's see if they changed their mind about anything. No. In fact, actually, it's slightly ticked up by 1% probability that we could see a pause, right? But it's still sitting right there just south of 70% that we're going to get another 25 basis point cut again. So a whole lot of nothing. He's not going to be definitive about anything. He wants to leave his options open. He did not want to talk about the election. I don't think that Donald Trump and him talk on the regular basis. My favorite parts, will you step down if DJT or Donald J. Trump asks you to? One word answer, no. No laugh, no smirk, just no. Follow-up question, can Trump fire you? Not permitted under the law. That's his delivery today, T-Shroom. As much as the whole thing was a nothing burger, he was dead on with his delivery of his answers. Loved how he did that. And then someone asked there at the end, when will people feel good about the economy? These are the kinds of things. Because there was nothing really to break down there, T-Shroom, and we're watching in price. Oh, it looks like we're making a little pump at the moment there, getting them up there. Highest we've been here. I think we're breaking highs again. Yeah, we're breaking new highs right now. So overall, it's kind of coming in kind of nice. Good. Here's what people need to know, because we were talking about this in chat. So I could be wrong on this. We'll need to fact check this. Donald Trump cannot straight up fire Jerome Powell. Donald Trump has made comments months ago that he would fire Jerome Powell. As Jerome Powell said, he's not permitted under the law. I believe that is true. The way the Fed works is it's a government entity, but it's separate from, obviously they weren't elected, they were appointed. Someone pointed out, they said Donald Trump actually was one that appointed Jerome Powell. Yeah, if you watch the Joe Rogan podcast with Donald Trump, he talks about how he appointed a lot of people because he had no idea what he was doing, and he had to appoint people, and he pretty much didn't know who to appoint because he isn't in that field. And someone told him, oh, you got to appoint this guy for this, and this guy for that, and this lady for this, and this lady for that. And he just followed blindly. Well, it turns out he said I made a lot of mistakes in who I appointed. So I don't think that it's like they used to be friends and now they're enemies or something. I think he didn't know who Jerome Powell was back in 2016 or whatever year he appointed him, and probably regrets that appointment. That being said, he cannot fire Jerome Powell. I believe Jerome Powell is right about that. Well, I think Congress has to get involved. I think the way if you're correct me on this one, what has to happen?
So I asked
you can get rid of my screen now on this side.
Yeah, no worries. I asked ChatGPT, how can the FOMC chairman be removed in 2 sentences? The chairman of the Federal Open Market Committee, Jerome Powell, can be removed by the president for cause, as outlined by federal law. However, this action is rare and would typically require significant justification related to misconduct or incapacity.
Okay,
I don't think the cause.
So that's
is
not
there.
off. That's not off of what I was about to say.
Yeah.
Guess who decides if the cause is justified or not? Congress. Congress is going to be involved. If Donald Trump can convince Congress to impeach, I think that'd be the right term here, right? Same thing with the head of the SEC and Gary Gensler. I think Congress is going to do it. To get rid of Gary Gensler, they're going to impeach him, get rid of his position, or remove him from that position. I think it's the same thing with Jerome Powell. Now, what I'll say is I think there is plenty of cause, and it will be very easy to remove Gary Gensler. Where I go to Powell, I don't know if there's a good cause to remove him. And I've said this, I don't think necessarily, with the exception of maybe the first couple months of interest rate hikes back in early 2022, I actually feel like Jerome Powell has done a better job of making up for mistakes. He just started raising rates way too late. That was the biggest mistake that he made. Yeah. But I feel like what he's done over the last 12 months, I'm not even really that upset with how he's treated it. He clearly isn't a friend of Trump, but he's made it clear, it's like, I don't really care what Trump does. I'm going to continue to do the best job I can. And as he kind of put there, they're still trying to accomplish balance. Now, that leads me to the question, T-shirt, that I thought was interesting and I kind of want us to talk about, because we talk about this on the show all the time. So one of the last questions asked was, when will the people feel free feel good about the economy, right? Because Jerome Powell has continued to come out on stage and said the economy is strong, the economy is strong, the economy is strong. We're liking what we're seeing, but that's obviously not what people are feeling in their pockets. By the way, someone pointed out Bitcoin definitely now is at all-time high, starting to take out some of those liquidations we had on my chart. Again, runway up here, 77 and 77.4 are going to be interesting to watch there. Go back off the screen. Here's where we'll kind of expand it and help with. We've said this before. You have to live in the world of data and you have to live in the world of reality. The reality is that inflation was so bad and so terrible that it caused a massive increase in prices. And what Jerome was kind of getting at, he's absolutely right. When he says the economy is strong, he's talking about the bleeding. We can stop the bleeding, but we have no effect about putting blood back into the body is I guess the best way to kind of put that. He's doing a good job of stopping the bleeding, stopping things from getting even crazier, more expensive. But they're going to keep getting more expensive. Even with our goal of 2% inflation, guys, that still means everything gets more expensive every year. It just gets more expensive by 2% rather than like by 8% what we had back in 2022. His job, he can't make things cheaper. He can stop bleeding of how fast they get more expensive. What's going to stop or what's going to get people into feeling good about the economy is when this is why Donald Trump and his team is going to be so important. It's not about can we make things cheaper. It's can we improve the economy where more jobs come in and where people get raises, right? If you're excited about where gas was back when gas was at $2, well, the person back in 2000s pissed about that price, right? We would be very thankful and grateful if we would get gas back down to $2, but that's still astronomically higher than it was 20 years ago. We're never going to have the same prices for goods and services that our parents, our grandparents, and our great-grandparents had. That's impossible. Get that out of our mind. But as T-Shim, you and I have said, I grew up in a house. I had 4 siblings, okay? I had 4 siblings. We had a single income household. My dad worked. My mom stayed home, homeschooled all of us, right? In a conversation I had with my dad, again, I moved out of my house in 2013. The most my dad was ever paid a year was about $90,000 a year. Today, in 2024, almost 2025, you cannot raise a family of 5 or a family of 7, if you include my 2 parents and us 5 kids, on $90,000. And I guess you can survive on that, but you can't. We went on probably 1 or 2 vacations a year. I competed in travel sports. I competed in speech and debate tournaments where we traveled the country. We did a lot. Like, were we extremely wealthy? No. But I, much like Kamala Harris, grew up in the middle class. But we lived off of $90,000 a year. At our best, that wasn't even all the time. That was just he had a job for 5 years and paid him $90K. The rest of the time, he's making closer to 70. What's my point here? The days of living off of $90K and having a family of 7 is over if you want to do a lot. But you can still live that same lifestyle if you make $150,000, right? I don't know the exact mathematics of how all the inflation has worked between when I was growing up and now, but the point is, the way to live the same lifestyle that you live, you just have to make a whole lot more money. And so Jerome Powell and the Fed, they do not have control over that. They have control over slowing down the bleeding of inflation, slowing down how fast the money is devalued. But we need our president, our Senate, our Congress, we need our leaders and officials to enact laws and regulations that spark the economy, put more money into the hands of businesses that end up paying paychecks, that get people paying and making more money. No one is living off of minimum wage anymore, right? And we keep raising minimum wage, thinking that's going to fix it. That ends up making everything worse. But the problem is people legitimately used to live off of making $6 an hour, and that was a good pay. You can't do that anymore. We're going to get to a place where even working at McDonald's, you're going to be making $20, $25 an hour. Is that going to cover all your bases? No, it's not. But that's where the world is. I think anyone who's saying Jerome Powell should be blamed for why everything's more expensive, I think it's a little wrong, and I think that's not where the blame should really be going. He's doing the best he can to stop the bleeding and keep inflation low.
Yeah.
He can affect the job market in terms of the interest rates, but the real people who are going to fix and make citizens feel better about the economy are going to be our government officials who pass laws and regulations that either boost businesses and allow businesses to pay people more money or hurt businesses. And then all of a sudden everything gets cruddy all over again. So in case anyone was confused on that, that's kind of, no one should be upset at Jerome Powell about everything getting more expensive. And the truth is, while he could have moved quicker back in 2022 to fix the problem, he wasn't the one who caused so much problems. He wasn't the one that printed the dollar into oblivion. That was the government at the time that did all this. So,
yeah, with crypto, we got some stories here, so don't go anywhere. We'll get into those stories in just a second. With crypto said family of 9, and we were looked at as well off in our town. I make over 200K now, and no way. I have 3 kids, and they have just what I had. So that's a take there from the chat. Tim, we've got some interesting stories here. We just heard from Jerome Powell giving a very traditionally comforting, but also not rocking the boat speech there at the FOMC. 25 basis point cut is what we received today from the Fed after an election of Donald Trump. This is sending asset prices much, much higher. Bitcoin putting in all-time highs as we speak. Very, very bullish.
Well, it's back down now. We're back down now, 76.6 again.
76.6.
Right? So, and guess what? That's something that happens. It's volatile leading into these announcements. Mm-hmm. We tell everybody it can stay volatile up for 24 hours after, right? Mm-hmm. So we could still be bouncing this time tomorrow, and that's not out of the ordinary. That being said, that's why we'll go back to my chart here real quickly. And I'm not saying we can't expand past this, but these are going to be great levels to keep an eye on right here. Let me zoom back to where it's in a bright yellow. There's a lot of shorts that would be liquidated if we get up here to 77.4, 77.5. There's a lot of longs that will be liquidated if we come down here to 75.5. What does that mean? Traders will target both of these. Which one will happen first? I can't tell you with any certainty. But don't be surprised. There's a chance that only one of these is, but I would not be surprised at all, T-Shroom, to see something like this or something like this. This is the kind of crap that can happen during Fed days when nobody really knows what's about to happen next. Keep your eyes on those levels for potential longs or shorts. They're going to be key levels to keep an eye on if we move down or if we move up.
Mm-hmm. And I would be looking out for the next couple of days. This week was all about bullishness, right? The institutions, the market makers, they're very comfortable with letting letting Bitcoin go into price discovery phase. But make no mistake, there will come a time where it is no longer in the manipulator's interest for price to continue to go up for Bitcoin in the short term. What does that mean? We're listening out for stories, for headlines, whether they come from Iran, whether they come from Mt. Gox, whether they come from some sovereign nation, Germany, deciding they're going to sell some more Bitcoin somehow. Those headlines are going to be ringing here. The question is, will it be next week? Will it be the week after that? And the answer is in the mind of the market makers, the manipulators, and the institutions. If that scares you, don't be scared. They can't manipulate the price of Bitcoin in the long term. The price of Bitcoin in the long term is determined by the market fairly, and so is every other asset in theory. But in the short and midterm, absolutely, markets are a casino. So let's go ahead and jump on into the news for today, Tim. China's Central TV reports that Trump has promised to make the U.S. the world's Bitcoin and crypto capital and establish a strategic Bitcoin reserve. This is an interesting headline, and you don't hear about this kind of stuff very much. Tim, what are your initial thoughts on this one? I've got some thoughts as well.
I don't know if I'm supposed to have a thought here. It just is. That's what he said. That's what he's been big about. I think China's just telling their people about it. I think the bigger question in the room, T-Shirt, and I just have to say this because everyone else comments, is, are you in a men's bathroom streaming right now? That's going to be the question of the day.
I'm not. But no, I think that this is actually a really interesting headline because you don't see, first of all, we assume this is true. We see, the watermark up here on the video. It looks like it's in Chinese. You can hear the Chinese person in the background giving the news. But the ultimate thing here, I think that's really bullish, is that we now know that Chinese people are seeing the word Bitcoin associated with Trump, right? That in and of itself is something to note. We don't know how Trump is positioned in the mind of the average Chinese person. I certainly don't know what the favorability rating is for Trump. But we could assume that some people, maybe not the average and maybe not most, but some people in China might think highly of Donald Trump, and they're seeing Donald Trump, United States, and for those who understand how a treasury works, they might think, hey, this could be a good investment to try to get into, although it is banned in China. Over 250 pro-crypto candidates elected to Congress in the United States in this election, Fox Business reports. This is just bullish, no matter which way you look at it, for crypto, for Bitcoin. You know, it's looking like, I don't know if the House has been completely confirmed, but the Senate does look like it's going to be going red for Trump's Trump's second term, excuse me. And I do believe the House is at least trending in that direction. Tim, do you have any data on that?
Yeah, so I'm looking at right now, there's 3 still to be called for the Senate, but the Republicans have 52 to 45. Of course, what we're talking about right now is not a Republican versus Democrat system, because you can be a Democrat and be pro-crypto, right? That's awesome. As the House, there's still 28 seats to be called. Republicans are at 220, and the Democrats are at 197. Now, I think the other day we said something about 220. Maybe I'm a little off. It's saying here 218 is the mark to get to control, or that's the midpoint, I guess. So maybe you have to get to 219 to be in the lead. If they both have 218, they'll split or something. Still a lot to be called there. I don't know why it took away our map. I loved that map. It was very helpful. I liked it. It's gone.
Regardless, you make a really good point, Tim. Just because there's a lot of Republicans, that's gonna speak more to issues in the United States that matter to Americans, like immigration and free speech, like all the different issues that exist out there. But you make a great point, Tim. When it comes to crypto, there's actually a good amount of Democrats who are sympathetic, at least, if not avid proponents. I believe Ro Khanna is a leader in the Democratic Party who's pretty pro-crypto. We'll get into our last headline here, second to last, I should say. And this is that your boy T-Shroom, I gotta get my flowers for this one. I called Trump's landslide victory weeks ago. I did not think his success would reach this far. Tim, listen to this fact. Trump wins white suburban men by 24 points and white suburban women by 4 points per NBC. What does that mean? Okay. That means that the average white suburban woman who voted in this election voted for Trump. That is insane. And it by 4 points. I believe Biden led by 20 points in 2020.
Right.
If that doesn't say landslide, I don't know what is. It's absolutely insane. Another crazy fact that illustrates that this was a landslide for the Republicans, for Trump, was that there was not a single county in the entire United States where Harris increased the amount of votes versus Biden in 2020. Just let that one sink in. She was so unpopular that she literally overcame something that should be statistically impossible with all the thousands of counties in the United States. Not a single one thought that she was more electable than Joe Biden. Very, very,
the one that
crazy.
I thought was interesting, T-Sherman. I'm just going to say this and let people chew on it. I'm not going to say what it means, but some of you should know what it means. People are baffled right now. Especially the left is baffled. How is it that we had record turnout for voting and 20 million less votes counted? What could add up to that? More people come to the booth and record turnout, yet 20 million less votes. So I'm going to say on it. Let's keep moving on, though, T-Shirt. Someone asked us to look at Ethereum really quickly. Let's take a look over here at some stuff that's going on. ETH, obviously, at the moment, outperforming Bitcoin on the day. Levels I'm watching, there's some high liquidations up here at 2,900 on the 1 minute chart. We got some interesting stuff down here at 28. If you come out to longer time frames like the 1 hour here, I'll turn off liquidations. Let's turn on some other things over here. Take profits. Again, going to match up with those liquidation levels. 2,900 are going to be kind of interesting to keep an eye on there. Order block down here at 2,800. So the volatility, is going to probably be within that range on the short term. But we're seeing some momentum come in here. Look at that MACD on the hourly chart, about to cross bullish here once again. Even though we have a reversal in play, it looks like we're still having some positivity here. Ethereum is definitely acting very, very bullish here right now. Let's go to a longer time frame, though. What are you guys looking at? We kind of talked about this earlier in the show, So if you weren't here, I'll briefly run you through what I'm excited about. Symmetrical triangle pattern was in play. Long-term breakout should send us up here towards $3,500, almost $3,600. We have broken above that red line. Liquidations would suggest there's not a whole lot to target until we get up there, meaning we're bullish right now. There's a lot of catalysts to be bullish. There's no targets right here where people are going to be massively wanting to take profit. Ethereum could pop off very quickly back up here about $3,500 in the next little bit. But it is 3:30. We have been going now for a long time, very, very long time.
I've just
coming
got
up almost on 2 hours. Any more news before we wrap out the show?
Yeah, Tim, I've just got a couple more headlines here that are just absolutely befuddling. I saw some people in the chat that just couldn't believe that statistic about the counties. This is as of CNN's reporting. Take a look, take a listen.
So you asked, are there any places that the vice president is overperforming Joe Biden in 2020? So we could show you that as well. We just bring that out here. Harris overperforming in 2020.
Holy smokes.
There you go. So let this go away and see if there's anything on the east side there.
Literally nothing?
Literally nothing.
Literally not one county?
So you asked.
So that's not a parody. That was a real moment on CNN's live reporting there. Now, Tim, there was a lot of winners in this election, but Elon may have been the biggest one. This was pretty funny. Elon is such a dummy. He spent $44 billion on Twitter, and all he got was control of all 3 branches of federal government. Tim, there's some humor out there floating around.
We kid. That is funny though. That is pretty funny.
That's all.
I at the end of the day, like I'll say this. I said it yesterday, and I'll say it again to people here. I voted for Trump. I'm very glad that he won, as is T. Shroom, and as is probably a majority of you guys here watching. That being said, in the same way that Republicans barely slept for the last 4 years, watched Joe Biden with a fine-tooth comb, looked for any little step out of line to make a comment on. I hope we don't go to sleep for the next 4 years, all of us who voted for Trump. I hope we don't just give him this free pass to say, all right, do whatever you want. We'll turn a blind eye. I'm going to continue to watch him like a hawk. I'm going to continue to watch Elon Musk like a hawk. I mean, I like Elon Musk, but he is a man with a lot of power. And I love that he's used his power to this point, T-Shroom, to buy X and leave the world with a platform that has free speech. I love that. I love what he's doing with Tesla. I love what he's doing with SpaceX. That being said, this man has a lot of power. And anytime an individual has a lot of individual power, you always have to wonder, as a kid, if you watch the superhero movies, right? Like Iron Man, for example, there's that whole scene in the second Iron Man like the premise of the movie is the U.S. government's trying to take control of him. The U.S. government wants to regulate him. And as a fan of the movie, you're sitting there just saying, oh, let him do it. He's a hero. You guys are being so stupid. As an adult, you have to sit here and think that's absolutely wise. Because yes, Iron Man could use all of his power for good and save the planet, but he could just as easily use that against anyone he deemed a threat. In the same breath, Elon Musk is a very powerful man, and I'm very grateful that for the most part, he has used his power for good, or at least in my opinion, good, but he's a threat as well. He could easily use power for evil. So I hope that anyone who's excited about what just happened here this week doesn't go to sleep. You continue to watch Donald Trump with a fine-tooth comb. Continue to watch Elon Musk with a fine-tooth comb. Continue to watch our government and make sure, when they do the things that they're supposed to do, that we told them to do, that they've said they're going to do, we say, all right, good job. We give you applause. But when they mess up, let's not be silent. Let's not make excuses. Let's hold our leaders accountable for the jobs that they have. At the end of the day, they might get to make key decisions, but we, the people, still control them when it comes to the voting booth. Make your voice still heard. That means at the voting booth and outside the voting booth, let your voice be heard. That is your right as an American. TA on Alf, your thoughts. I don't even know what this is, man. And I can't even read your name. Like, I can't even mispronounce your name. Cannot even
it
get
looks
that
like
one.
it looks like the language in Thailand. I'm not sure, maybe Malaysia. Yeah. So we if you're watching and you hearing this in whatever language you speak, we usually don't do TA on random coins like that. So appreciate your donation. If you can figure out how to get refunded on YouTube for that, you're more than welcome. But
I'll tell you this. A lot of people asking for a lot of coins. We're going to go and wrap up the show again. We've been going almost 2 hours now as we covered the FOMC meeting live. Here's what I'll tell you. If you want to get access to my takes on your coins, if you want to get more access to us, join our membership group. Join our VIP trading. You can buy Luxalgo and connect into our Discord with it. You can purchase one of our membership packages and join our live trading. Every single day, we have live sessions with myself, T. Shroom, Crux. We also have Rufio and Silent and even, Steve. He has a new name, though. He used to have a different name. He's changed his name.
Steve
We got a lot of
Z-Bro.
great trading minds, a lot of great chart guys, a lot of great investing minds that are constantly in our Discord for our paying members, giving them feedback on charts and investments and portfolios. If you want to get access and ask us these questions all the time, I'll do my best daily on the shows. Can't do them all. However, you come join one of our live trading sessions or Q&A sessions, and you ask me to do TA on your favorite coin, I promise you I will do it. Go check out those memberships down below. T-Shroom, as we wrap out today's show, this is going to be the last one for me this week. I'm leaving town tomorrow morning. I'm headed to the Virginia Tech Clemson game. Both teams coming off of devastating defeats last week. Should still be fun. You're going to be here in your bathroom doing a live show tomorrow. Is that correct, T-Shroom?
I will more than likely, and I'll also be going live in Q&A right after this stream. So if you
can you touch that glass right? Can you prove to us this is not a bathroom? What is this behind? This looks like a shower stall.
You want to see? It's like a cubicle type of setup here. It's just you can kind of see some offices.
All right, there's proof.
Shower
He's not in the bathroom, people.
Just kidding.
He's not in the bathroom. It's not in the bathroom. Yep. With that said, as we wrap out, Tim's thought of the day. I'm gonna go a different direction. Sometimes I go more deeper in life. Let's keep you investing right here. A lot of people are asking me right now, should I do this? Should I do that? Should I do this? Should I do that? Here's the thing. We actually had a membership meeting yesterday where someone was asking a question. I cannot tell you. I'm not a financial advisor. Also, I'm not you. I cannot tell you exactly what to do with your money. I can't tell you exactly when to buy or when to sell. I can tell you where I like. I can tell you the levels I have. I can tell you how I handle my money. But at the end of the day, if you just blindly follow everything that I do, you're not learning your own lessons. You've got to develop a plan and a strategy for how you invest. But here's the deal. Whether you're looking to take profit or you're buying, this is my advice to you. Come up with a plan and stick to the plan. Those who fail to plan are just planning to fail. What I mean by that is if you're looking to take profit, well, what's your next strategy? Are you taking profit because you think there's a dip, in which case you want to buy in lower? Well, what's your plan if the price goes up? What's your price you're going to be buying at the higher level? Or are you taking profit to go invest in something else? Well, is this the right time to invest in that thing? Too many people have no plans when it comes to investing. They take profit and they buy in randomly and then later get upset when things don't work out the way they had hoped. A wise man, though, always has a plan. Whether his predictions are right or his predictions are wrong, you always have a plan. I advise all of you, if you need help with that, that's another great thing that we do over in our Discord. Come check us out. With that said, we love all of you guys. You guys have a fantastic weekend. T-Shirt will be back tomorrow in his office, not his bathroom. He promises. Love you guys. See ya.